Hi, Ezekiel here. So today I'm going to talk about how do you trade like a hedge fund manager. So do you think that a hedge fund manager would trade the same way like us retail traders? Would a hedge fund manager, let's put ourselves in the frame of a typical retail trader. So a typical retail trader, I would say is they would trade likely if they have a full-time job, they would trade after work. So after the day ends at their job, they go back home, and that kind of 2-3 hours before they go to sleep, that will be the trading time frame. So let's say you end your work around 6-7 o'clock and reach home and start trading at 8 to probably 9, 10, 11, 12 o'clock. Right? So that period of time is likely a lot of, it's the prime spot where retail traders who just started off trading would jump into this market at that specific time frame. So, and within that limited time frame, let's say 2 to 3 hours, do you think that the question is, how many super A or quality trade setups will it be in that small time frame? Likely not a lot, isn't it? So likely not a lot. So then what? If there isn't a lot of quality trades in that time frame and you can only trade in that time frame, then what? What does it mean? Does it mean that you are barely going to trade a day? Is that what a typical retail trader would do? Probably not. So what they would do is usually in that time frame, they will score around the charts to look for trades to enter, and they will usually enter on trades like any other trades. Or let's say they have a system, but they will find a trade to enter at least maybe once or twice a day, probably. So, however, on the other hand, a hedge fund manager, do you think you only trade that short period of time? Or, okay, you can say that no, he's a full-time trader, right? So a full-time trader, what does he do? So he has the time to look at the chart the whole day to look for the best trading opportunities. So that little difference means a lot. But does it mean that, hey, you should stop working right now and jump into trading because that's where the trading opportunity lies? No, I'm not saying that is a must do, because there are so many ways where trading can be taken as short term as possible, as part-time as possible. So I will not dwell on that topic in this session. But what I'm saying is, they do not squeeze the time out in that short limited time frame to find trades in that short limited time frame. They will not, a hedge fund manager or a fund manager or a prop trader will not go in at every single time there is let's say a moving average crossover, every single time price crosses a support or rejection level, every single time price crosses let's say forms a double top, every single time price forms a pin bar. They will not enter that when every single time it happens, because that is the big difference. You see, a trader who doesn't have a lot of time to trade, when they see a pin bar, and it's so rare to them, because if they miss this pin bar, they do not know that with that limited time frame, when will they get a nice pin bar like this again. So likely they will enter on a trade even though that is not the best pin bar possible to enter, because they know that, hey, if tomorrow if I will miss this pin bar, maybe the next pin bar that I will find is probably 1 month down the road, given that short time frame trade. So having said that, that's where they jump in on trades like this, and eventually when let's say that trade didn't turn out well, they will say that, hey, pin bar doesn't work, or they say that, hey, double top doesn't work, or they say that, hey, moving average crossover doesn't work, or at the end of the day they say, hey, forex trading doesn't work. But I want you to look at the other way. How does professional traders become professional? They don't trade the same way like 90% of the retail traders do. That is the key. So number one, when we trade, right, we look at the numbers. Let's say you put in $10,000, and that $10,000 means a lot to you. So if the market drops down by, let's say, and it goes against your way, and let's say you're out by $200-300 or maybe $500, if you feel the pinch, it's going to affect the way you trade. But on the other hand, the professional trader, the hedge fund manager, the fund manager, the prop trader, the bank trader, whoever it is, the professionals, do you think that they look at the numbers, and I'm sure their numbers will be way bigger than our typical retail traders' numbers? It could be in billions of dollars, or at least billions. Do you think that they will feel the same way as us? Or as a typical trader? No. To them, let's say they are trading, let's say a $20 million account. Do you think that they will feel the pinch, or let's say, not say feel the pinch, do you think that when the market drops in against their direction, they will go all frantic because this is their life saving, etc.? No. You know why? One thing for sure, it's not their money. But having said that, even though it's not their money, let me ask you a question. Is it easier for you to lose your money or to lose other people's money that they have trusted you and put their money with you? I personally think it's easier to lose my money than somebody who trusted me enough and put their money with me. I can afford to lose my money, but I don't think I can afford to lose their money. So you see, the way that they trade is that they look at all the dollars as just numbers. It's just numbers to them. It's not money. If you think that it's money, it's going to affect you a lot in your trading. These guys, the good thing about these guys is, a lot of times, let's say the bank traders or the prop traders who are hired to trade the fund company, the funds, the company's fund. One thing that is good is it's not their money. So if it's not their money, do you think that they will, like, in occasions when they feel that a trade is good, they go like higher percentage, and they feel that this trade will surely win and they go all in? No, because they are trading in a company's manner. They have to be a corporate manner. They have to be very systematic. So it wouldn't be like a typical trader whereby sometimes when we feel that a trade is super good, and then we will increase our capital for that trade. But if you will look at a fund manager way, a professional trader way, they won't do that. Because even though they make a lot of money, it is our expectation for the client. The client will not, if the client hears that, yes, alright, wow, if let's say I put in $1 million into it and then wow, you make me like 200,000 in a day, fantastic. Or you make me like $500,000 in a day, fantastic. But if I hear that you risk, let's say 50% of my $1 million account to make that 200,000, to make that $500,000, do you think I will be happy? Definitely not. Because you're risking my capital, almost all of my capital, for that win. No. I do not want to put myself in such a risk. But the fact is that a lot of retail traders put themselves in such a risk. So therefore, we need to look at this when we start off trading, or whether we have been trading a year, 2 years, 3 years, 5 years. What is important is that the numbers, the dollars, is just numbers. When I first started trading, in my early years of trading, what I did, because I really couldn't stand the fact that as the chart goes up, I see my money goes up. When the chart goes down, I see my money goes depleting. It's really terrible for me. So what I did is I hide that bar where it shows the money sign. So I hide that bar. So what I'm only seeing is the chart movement. I do not know exactly how much am I making. I do not know exactly how much am I losing. So if that helps you, it helped me in my early days. So perhaps you can try that. So the second one, what matters to them is that they trade with a system. They trade with a system. You see, here's the difference. For example, most of the traders out there where we trade, yes, we got a system that we will learn from here, that we will learn from there. Or we got a strategy that we will learn from here or learn from there. And when we apply it. But sometimes along the way, we may tweak the trade a little. Like for example, as we place our initial take profit target here. But as the market goes along, we decided that, hey, maybe the market is going to reverse, etc. blah blah blah. We decide to tweak the strategy. And guess what? Sometimes it works, sometimes it fails. Then the whole trading becomes very inconsistent. If you are trading with a system that is proven to work, we got to stick to the system. But that is easier said than done. Because when you are trading, there's a lot of emotional factors in place. So it's hard to stick to the system. And that is why I like to do a little thing called a tick system. So what I do is, for example, let's say I look at my trades, like I usually like to look at my trades in a set of 20 trades. 1, 2, 3, 4, blah blah blah, 20. And I like to measure my trades, I like to track my trades with a little journal. So I like to track maybe what pair am I trading, etc. blah blah blah. But what is important is that I have a column whereby am I sticking to my system? That means from the start till the end, I stick to the plan that I have planned out for it to be. Yeah, if that trade I stick to the system, I place a tick. Even though if that trade turned out to be a loss, it doesn't matter. What is important is that we stick to the system. So along the way, what you must have is that every single trade you have a tick away. If there is one trade, then you put a cross here. I would say in that set of 20 trades, it's a failed trade. It's a failed set. Excuse me. Because what is important is that we need to trade with discipline. Right? D-I-S-C-I-P-L-I-N-A. We need to trade with discipline. Discipline is the key that most traders don't follow. So, in order for you to trade with discipline, and in order to know that you are trading correctly in accordance to the strategy, in accordance with the system, you must check that everything is in place. If you don't check along the way, you will find that, I think if you look at your trading right now, you will find that a lot of times whereby you will not be sticking to your system all the way to the core. Sometimes you tweak a little bit of a variation, like sometimes you are supposed to enter in this manner but you enter in another manner. Sometimes you are not supposed to enter here but you entered here anyway. Sometimes you are supposed to enter here but your stop loss is supposed to be closer, but you think that in order to be safe you place your stop loss further, so you did that anyway. Sometimes you enter a trade and you know that by entering on this trade the risk draw ratio is not good, but you still entered because you feel that, hey, it's going to make you money, so you just entered it anyway. All these anyways are going to affect your whole trading system. At the end of the day, your trading is going to be inconsistent. Simple as that. It's going to be inconsistent. And all this inconsistency is going to kill you in the long run, because you will never know that at the end of these 20 trades, even though if you are profitable on this set of 20 trades, let's say you are making a profit at the end of the day, do you know that on your next set of 20 trades, all the way to 20, with all these random factors in place, will you still be consistently profitable? Will you be profitable in the next set of 20 trades? You don't know, isn't it? So therefore, you need to have a tick system in place. And that is something that I highly advocate. Alright, so this is 2 parts of this series of how does professional trade, how does hedge fund manager trade, how does prop traders trade, and how do we trade such that we as a small retail trader at home can trade in line the same way, managing big funds as the big guy. Alright, so stay tuned for this series and I'll see you on the next video. So I hope you enjoyed this week's episode. Do leave a comment below and let me know what you think, and it will be really awesome if you hit the thumbs up button. So I release new videos like this every Monday, and if you enjoyed it, do click on the subscribe button so that you will be instantly notified once I release a new episode. See you on the next video.